Now, if you turn to the real estate section of your paper this weekend, you'll likely see properties that are ridiculously underpriced compared to what they'll actually sell for. So we're asking, is it time real estate agents were put under the microscope?
Curse the money gods. Homes in Australia are expensive. Week after week, the underquoting of advertised properties continues to break the hearts of potential buyers. Now, in a bid to crack down on agents advertising property values below the likely sale price, the Victorian government is outlawing the use of price plus ads. Instead, an expected sale range will have to be provided to alleviate confusion for buyers. Despite the change, critics argue the law will have little effect, as advertised sale ranges bear little relevance to what homes actually go for. So is this a real estate revolution, or just a half-hearted attempt to reel in rogue realtors?
And joining us from Melbourne is one of the good guys, property consultant Peter Rogozik. Peter, do you think sort of getting rid of this plus-priced advertising idea will put an end to the underquoting of properties?
Yeah, hi guys. Yeah, look, it won't make one iota of difference, basically. Not, unfortunately, have to be straight down the line with you. Basically, the way real estate agents are getting around it now is they're not quoting a price. They're not putting anything in writing. So what they're saying is there's buyer interest, you know, for example, around mid-400s. So, you know, it's not in writing. And basically the property, you know, ends up selling as, and I'm giving you a real live example. This is, you know, inner city blue chip property, an auction just a week ago. It actually sold for high 500s. So, you know, they can't be done for underquoting because they're not actually quoting a price. So, you know, I guess that's the way real estate agents are going about it, to get around it. Now, the range price doesn't work either. And I can give you some examples. Again, this is inner city blue chip property. The range was 580 to 620, and ended up selling for 687. So that's more than 10% above the top point of the range. Now you had another one, again, you know, inner city blue chip property, the range was 370 to 400. Ended up selling for $506,000.
Now, Peter, one of the problems with this is people feel powerless. You know, they look up these numbers and the auction goes differently. But in New South Wales, all of the complaints to the Fair Trading Commission about real estate agents, no one's been prosecuted. Isn't it time we kind of clamp down on real estate agents and the way they behave?
Well, look, there's a problem nationally. The problem is this: you have two basic bodies regulating the industry. You've got the real estate institutes nationally, and you've got consumer affairs. Now, what the public need to understand is that the real estate institutes, basically, the membership is real estate agents. So no wonder they're not going to prosecute, you know, their own members. I mean, the real estate agents are paying the salaries of the office bearers of the real estate institutes. So no wonder they're not doing anything about that. And also you've got consumer affairs. Now, consumer affairs are the watchdog. They're the ones that, again, should be prosecuting. But like, you know, a typical government department, they're undermanned, and they're bureaucrats. They don't have the real estate savvy to do anything about it. So that's the issue. That's why nothing's being done about it, and it needs to change.
It does. And Peter, just quickly before we let you go, today we were warned that Australian property prices were overvalued by as much as 15%. Would you agree with that?
Well, look, I hear this every year, and and basically, no, it's not right at all. I think this came from the International Monetary Fund, and they're basically economists. They're based in Washington, don't understand the Australian market. Economists have their areas of expertise. And it's certainly not real estate. The quality segment of the market doubles in value every 6 to 9 years. You can't make massive generalisations about property markets. You know, for example, in Melbourne, you've got the St Kilda Road apartment market, you've got the CBD apartment market, you've got the inner city quality segments. So make a massive generalisation like that. All that says is you don't understand real estate.
Well, I scratch my head most of the time myself. Thanks very much for helping us out, Peter.
That's a pleasure. Thank you.
Have a good weekend. We're going to take a break. We're going to be back with the Metro Whip Around. Don't go away.